Today, we are going to try and decode a real head-scratcher in the world of crypto, XRP. We're talking about an asset that, by all accounts, should be doing great, but instead, its price has taken a nosedive. So what on earth is going on? Right, so here's the big question we're tackling. How can an asset that has huge institutional demand and is seeing its real-world use just explode also see its price fall off a cliff? It's a paradox, and it's got a lot of people confused. Let's see if we can solve this puzzle. And here's that contradiction laid out plain and simple. On the one hand, you've got these incredible green flags, huge demand for XRP-backed ETFs, and the network itself is absolutely buzzing with activity. But on the other hand, the bad news. The price didn't just fall, it crashed below that key $2 mark, caught up in a much wider market sell-off. It's a textbook case of solid fundamentals getting into a street fight with market sentiment. Okay, so to get to the bottom of this, here's our game plan. We're going to start with the paradox itself. Then we'll zoom out to look at the whole market. After that, we'll dig into the weird story of the ETFs, the regulatory cloud that just won't go away, the battle between utility and speculation, and finally, what this all means for long-term value. All right, let's kick off our investigation. Part 1, the XRP price paradox. We're going to take a much closer look at this contradiction. Look, in pretty much any normal market, the signals XRP was putting out, big money flowing in, and tons of people actually using it, that should be a recipe for a rising price. You'd think, at the very least, it would have held its ground. But that's not what happened at all, which tells you right away there have to be bigger forces at work here. And that brings us to our very first clue, the market-wide downturn. This is so important to remember. XRP wasn't just falling on its own. It was caught in a massive storm that was hitting everything. And that storm was basically a perfect storm, driven by 4 things. First, you had these big economic pressures, inflation, rising interest rates, that made everyone a bit scared of riskier assets. Second, a ton of investors who'd made good money just decided, hey, it's time to cash out. Third, you had general fear and uncertainty around regulations spooking the entire industry. And finally, you had this domino effect, where leveraged traders were forced to sell, which just pushed prices down even faster. Now for our second clue, and this is where things get really interesting. It's the puzzle of the ETF, which really acted like a double-edged sword. So just to make sure we're all on the same page, what is a spot ETF? Think of it like a basket that holds an asset, in this case XRP, and then you can buy and sell shares of that basket on a regular stock exchange. It's a huge deal because it builds a bridge for traditional finance to easily get into crypto without all the hassle. So if ETFs are bringing in all this new money, why didn't the price go up? Well, there are a few reasons. First, ETF investing is a long game. It's not about a quick pump. The impact is slow and steady. Second, you have these market makers doing complex trading in the background that can kind of diffuse the immediate buying pressure. And third, and this is probably the most important part, all that new money coming in from the ETFs, it just wasn't enough to soak up the massive wave of selling from existing holders who were trying to reduce their risk. But don't misunderstand, the ETFs are still a massive win. As this market strategist points out, the real story here isn't about a short-term price jump. It's about the long-term health of the ecosystem. It's about making digital assets a legitimate, stable part of the financial world. That's the real prize. Okay, on to our third clue. And this one is a big, persistent problem that's pretty specific to XRP, that long regulatory shadow. Yeah, you just can't talk about XRP's price without talking about the ongoing lawsuit with the SEC in the US. Even though Ripple has had some wins in court, the fact that it's not fully resolved creates this huge cloud of uncertainty. And for a lot of big investors and institutions, that risk is just too much to take on. So they're staying on the sidelines, waiting to see how it all plays out. So we've got all these clues. What's the final answer to our puzzle? Well, it all comes down to a fundamental conflict between 2 competing stories. The story of short-term price speculation versus the story of long-term, real-world utility. So what's the evidence for that utility story? Well, check this out. While the price was tanking, the number of transactions on the XRP Ledger, that's the actual technology under the hood, was absolutely surging. That is a massive sign of real-world health and adoption. So what does that surge really mean? It means people are actually using it. It's being used more and more for its main purpose, making cross-border payments faster and cheaper. It means more apps are being built on the network. New users and new businesses are jumping in. And we're seeing more real-world assets being tokenized on the platform. This is a picture of a technology that is thriving. And this quote from a blockchain architect just nails it. This split between a technology's usefulness and its price on the market, it's actually super common in new industries. It shows the market is still figuring things out. And for a while, pure emotion and fear can just be more powerful than the solid, fundamental strength of the asset itself. So, what's the verdict in all of this? Well, it's that to really get what's going on, you have to look beyond the daily ups and downs of the price chart and focus on what actually creates value in the long run. For any of you professionals watching, here are the 4 big takeaways. 1. Never lose sight of the fundamentals. Analyze the tech itself. 2. Keep a close eye on regulation because clarity there is the key that could unlock everything. 3. Always remember that true value comes from solving real-world problems. And 4. Embrace this change one step at a time. Don't just get caught up in the speculation. And this final thought from a Web3 entrepreneur really brings it all home. The people who are actually building the future here, they're focused on the long-term potential. They're going to keep building and innovating no matter what the price does tomorrow. That's where the real transformation is happening. So, we'll leave you with this to chew on. In a market this volatile, where fear and hype can send prices flying in any direction, what do you think is the true measure of value? Is it that number on the screen every day, or is it the power of the underlying technology to actually change things? The answer to that question is probably going to decide who wins and who loses in this next chapter of the digital world. Thanks for tuning in.